Hey, everybody, it's Seth with Everything Money. Welcome in. We welcome you to the show. I'm here with Paul and Trader Mo. The premise of our show is me, the normal guy, brought up under normal upbringings. My mom worked for a phone company. My dad drove a dump truck. Paul and I went to school together, and then our lives diverged, and we came back around 20 years later to make this show. But I bring your questions as a viewer, normal person questions, to a couple guys, Paul and Mo, who manage multi-million dollar, tens of million dollars of portfolio and $100 million real estate portfolio. I bring you the questions you've been wondering to ask some really rich dudes. And here's one of them. I had a recent conversation yesterday, Paul. It was a married couple, lovely couple. They're acquaintances of mine, just recently met. And they don't have much of a life savings, which is fine. They're 30. I didn't even have a job when I was 30. So,
but for good reason.
I was getting a PhD. Yeah. But regardless,
I don't know if that's a good reason.
Recently, he said, yeah, of course. Recently, they said, we did start investing and we're very excited. They took their first $2,000 and put it right into Ethereum. And then I started with the Paul questions. Why? Why did we do this? Why now? And we started breaking down, like, why did he buy Ethereum? What he done? He's been doing his research on YouTube, and what he thought. And then in the end, I said, in the end, I was like, he was actually in the midst of maybe buying into a company. So I said, did you look at the financials of this company? If you were to buy a company.
He was going to buy a stock or actually a company?
An actual company here in Columbus. He was interested in partnering. I said, wouldn't you look at the financials, maybe the revenue? Do they have a ton of debt? Are you buying into a company that's completely underwater? Are you buying into a company that may have fraud and all this stuff? And in the end, we started talking about how a crypto price or a stock price is not necessarily the value of a company.
In fact, it rarely is.
So in this video, what we want to try and do is Paul's going to explain to you why when you're buying a stock, you are buying a company and not a ticker symbol, which is a crazy thought that I had to settle into my mind over the course of the last couple of years. And Paul's going to try and do that over the next couple of minutes. Go ahead, Paul.
So let's start with this. Let's say, like Seth's friend, you have a neighbor, and the neighbor has a business and it's growing. And they said, hey, Joe, I want you to invest in my business with me. What's the first thing you'd ask for? Would you sit there and say, all right, cool, here's my check, just take it?
No, that would not happen.
Of course not. We own 2 houses in Mexico. And the person who splits the one house is one of the biggest Tesla fanboys I've ever met in my life.
The person whose house is in between
ours.
Our 2 houses.
One of the biggest Tesla fanboys. Never talks about fundamentals, says it doesn't matter. I offered him to buy into one of the houses with us because he wanted to buy it.
Oh.
His first comment was, can I see your projections? I remember thinking to myself, well, first off, F you, because I do it better than you, so you shouldn't even ask that question. But second, all of a sudden now projections and financials matter. Mm-hmm. All of a sudden now it does when he buys a company. But I get it. Because we all see the stock market and we see these tickers going up and down, up and down, up and down, right? But if you're to buy part of your neighbor's business, you want to know, what's the revenue? What are the expenses? How much money do they make in profit every year? How much do they have in debt? What's the potential for the business? How are they going to grow the business? All these questions that you would ask your neighbor are the questions you need to be asking about a stock. What's the difference between the stock, the investment you're making your neighbor versus a stock? What's the difference?
Well, Paul, there is no difference, but I guess the point is...
There is a difference.
Well, no, wait a second. There is a difference.
Oh, go ahead.
What is that difference?
I don't know.
Mo?
One's public, one's private.
So what does that mean?
The public one, you see the price fluctuating every single minute of every single day that the market is open.
Correct. So we have this immediate feedback.
I see.
The feedback loop in a way. I bought the stock. It went up. I feel better. It went down. I feel worse. I went better. If you bought your neighbor's company, every single day they come home, are you going to them, hey, what's our company worth today?
No, not at all. That would never.
Why not? When you look at your house, is there a big sign above your house every day that changes and says, this is what your house is worth? This is why we don't worry about the day-to-day fluctuations when we make private investments. And guess what, guys? I'm just as guilty. That's why when I look at stocks, I always have to sit there and remind myself, Paul, if this was a privately held company, would you pay this price for it?
Oh my gosh, I'd never think that.
That's what you have to think.
I don't think viewers think that. I think,
of course not.
No, they don't.
But that's what investing is. That's what It's not about what you buy. It's about what you pay.
So if you're like me, you might be thinking out there that I'm buying a ticker symbol, and when I buy said company, I need that number to go up, and that's how I make money. And if it goes down, I'm in big trouble. But what is the difference, Paul, that I should be thinking?
So, by the way, there is a way that you can go and look at only the stock price. But if you're about buying a company for its fundamentals, and you might sit there and say, well, I'm not. But then when you tell me, oh, this company has so much potential as growth, you're talking about fundamentals now.
Mm-hmm.
The second you bring up revenue, profit, anything having to do with any sort of number about
Number
the
of
company's
cars they're going to sell.
Yep, that's immediately back to fundamentals.
So whether you know it or not.
Whether you know it or not, you're talking about fundamentals at that point. All I'm asking our viewers to do is realize, okay, well, I can look at a few more fundamentals and understand which are the best options out there.
That's the point of the show, really.
That is exactly the point of the show. And I repeated it on a video before. This Howard Marks quote is, I think, the fundamental belief of value investing in general. It's not what you buy, it's how much you pay. So your neighbor has a business they want you to invest in. You're gonna ask them for all their financials. You're gonna say, hey, in the last 3 years, they've averaged $1 million in profit. They want $5 million for it. That's 20% return on your money. Great. When you look at a publicly traded company, you should be looking at it the exact same way. How much am I paying for every year of revenue and profit? The next questions are, okay, how much potential do I have company in the future? That's really the art of investing.
Yeah.
What is the growth potential for that company? Is it decreasing? Is it increasing? Is it increasing at a fast rate, slow rate? Is it staying the same? These are all part of the qualitative aspects of the business you have to consider. It doesn't mean that you can't make money following just the price of the stock.
Yeah.
But the second you start talking about how the company has so much future potential, fundamentals, immediate fundamentals. I love it when Trader Mo has a show every morning, and I'll sit there and see people say, hey, let's look at trading blah, blah, blah stock because they're about ready to do that. It doesn't matter. The way we're looking at our trading, momentum and chart reading has nothing to do with what the company is doing from a business number standpoint. It's all about what do the charts tell us to do? What does the momentum tell us to do?
So instead of a long-term buy and hold of a company, the opposite of this would be a very short-term, either day trade, momentum trade, week trade. And that's what Trader Mo is doing. So Mo,
which I'm okay, by the way, I'm 100% okay with. I get concerned when there's overlap.
Yeah.
But the funny part is a lot of good, successful traders like to overlap them. I do not. If you read a book on New Market Wizards, I read it, and every single person in there is like, well, I used to only trade the numbers. Now I bring fundamentals in. I go, I don't get that. It doesn't work for me. But it could work for somebody else. But Mo, explain what you do with the charts.
There's no bringing fundamentals in. Like this is United, for example. I'll go and look at the news on United of the day, and of course, something happened today where the CDC said something about cruise lines and they can cruise again. So of course, I'm looking for things that have momentum today are going to be changing trend. That's the only bit of news, quote unquote, fundamentals that you want to bring into trading. With this, I literally don't care what this, I mean, you could trade a ticker symbol, let's call it UAL, but you're really just following patterns. And this is where you don't care what the cash flows are of the company, what the debt is of the company. It doesn't matter. The only thing that matters to me today about this is that it has momentum from news that came out, and that's what's driving volume of the stock. Besides that, it doesn't matter. That's when you can go and buy a ticker symbol and not care about buying a company.
But even then, though, Mo, do you even need that? Couldn't you just
don't
screen?
need it. You don't need it at all.
For show me companies that have big momentum shift in the last 30 days.
Exactly. You don't need it at all. And it really doesn't make one bit of a difference at all, even to look at news, at all.
So bring this around, Paul. When we analyze stocks on our show, we like to point out that very rarely do we look at the price first. It's one of the things you look at last.
I actually don't even look at the price. I look at the market cap. That's the price I care about. I don't care about the price of the stock. I care about the market cap, which is the shares outstanding multiplied by the stock price. That's telling me what it would take me to buy the entire equity position of the company.
So pull up a company for an example.
Okay, so let's talk about Intel, and let's compare two companies. We'll talk about Intel and using our software here. So this is our software. It shows you some major fundamentals here. Market cap. This is the market cap. Number of shares outstanding multiplied by the ticker price. Where's the ticker price? It's up here somewhere. Don't really care, because all I care about is right here. Because guess what? The company can issue more shares and it'll hurt the stock price in the long run, but the market cap will eventually stay the same. Because at the end of the day, the market cap is what you're paying for the company, and the per share revenue and profit is what's going to drive that market cap number.
I see other videos that's saying these are top 5 affordable stocks in terms of just the price of the stock.
Great. So according to people then, let's see.
Berkshire?
Oh, yeah, Berkshire Hathaway. Class A shares. 435,000. So is this an expensive stock?
Yes.
Of course people are going to say that. You're focusing on this too much.
Right.
What I look at is market cap, 667 billion, and net income of 104 billion. Let's compare it to Tesla.
So 600 billion market cap and
100 billion in profit.
That's pretty good.
Tesla, $606 a share. Okay, so theoretically less than 1.15% of Microsoft, Berkshire. Market cap, almost the same, 582 versus 660.
Almost the same?
Net income, 1 billion versus 100 billion. So what matters? If you're focusing just on the price of the company, I remember sophomore year of high school, we were in Algebra 2. Do we have the same Algebra 2 trade class?
You know, I don't recall. Who was our teacher?
Well, it was Richie.
Yes.
Yeah, but we're in the same class though.
I don't know.
Either way, we had this teacher who was who was the track coach. And I remember one of the kids in our class, Brendan, I still remember this like it was yesterday, raised his hand and goes, oh, you like Nike. I wish I could buy Nike. It's too expensive. And I remember, this is one of the things I remember thinking to myself, well, how does he know it's too expensive? What is he getting for that money? That's what it triggered with me years later that I was a value investor back in sophomore year of high school.
Yeah.
Because all he cared about was Nike at the time was selling for $50 a share, and that was too much money because he couldn't buy a ton of shares. That's completely asinine, completely stupid.
Yeah.
But that's what's expected from the average investor. Because at this point then, according to this, Berkshire was worth 1,500 times more than Tesla. Well, but it's only selling for 20% more. How is that?
Mm-hmm.
That's the thing, guys. That's the issue that we talk about. Don't focus on the price. Focus on what you're buying behind it. When you're buying a publicly traded company, you have to look at it like you're buying a business. Berkshire versus Tesla is a prime great example. In fact, we did a video on that one, the companies you could own besides Tesla. And we got a lot of comments from people saying, oh my God, I just sold my Tesla and I realized how overpriced it is versus these 5 companies. I could own 5 companies that generate tens of billions of dollars versus one Tesla that generated at the time like 500 million. I was like, yep, that's exactly what we're doing here.
If you've made it this far in the video, you should be congratulated because this is somewhat of a boring financial stuff. And that's the way we like it, actually, sort of the tortoise versus the hare, sort of slow and steady discipline. So if you've made it this far and these numbers speak to you, this is how we analyze our companies. This is how we choose our 20 to 30 stocks that we really like. And we say no to the other 10,000 of them that other people are maybe doing videos on. So if you're new to the channel, we welcome you in. You're going to see a lot of videos where it's a hard no and a very few where it's a yes. And those are the ones that are in our portfolio as we're searching for those value plays, the stocks that are underappreciated and underpriced at the moment. And that's what's in our portfolio that we share with our patrons. The software behind Paul is incredible. This is the software that our patrons get. So if you want to be in a Patreon and you feel lonely out there in your investing journey, feel free to join our Patreon. Click the link in the description below.
80 cents per day gets you all access to the software and all the growth of it.
Yeah, you get the software, all the improvements we're making. Paul, you spend $50,000 a month getting the software developed. It's completely absurd.
I don't think it's $50,000 a month. This whole entire channel costs me about $50,000 a month with all the salaries and the revenue share and everything. But the software alone is about $30,000 a month of that 50.
We're giving that to our patrons and they're loving it. So stay tuned. If this resonates with you, how would I say this? If this resonates with you, you're probably going to be alone if you bring this up at a party. There's not going to be a lot of people who agree with you. You'll get a lot of crazy looking faces, but this is how you become folks like these guys, I assure you. So that's our video. That's our take on buying a company, not a ticker. Tickle that thumbs up on the way out and join us on our live streams Tuesdays at 1 p.m. Eastern. We welcome you in. Thanks for watching.